Welcome to today's news impacting the markets. President Donald Trump declared on Monday that a monumental trade agreement has been reached with Japan. The deal, valued at $550 billion, will see Japan investing heavily in the U.S., with America receiving 90% of the profits. Trump emphasized the job creation potential, stating it would generate hundreds of thousands of jobs. Additionally, Japan will open its markets to U.S. cars, trucks, rice, and other agricultural products, while agreeing to a reciprocal tariff of 15% on U.S. imports. Trump said, quote, "Japan will invest, at my direction, $550 billion into the United States, which will receive 90% of the profits." He also added, saying, quote, "This deal will create hundreds of thousands of jobs. There has never been anything like it," end quote. Trump's announcement, made through a post on Truth Social, comes after a series of tense trade negotiations with Japan, where he had previously threatened tariffs as high as 35% if no agreement was reached. This deal marks a significant shift in the trade relationship between the two countries. The announcement was made on Truth Social, where Trump expressed excitement about the strengthened U.S.-Japan relationship. He said, quote, "This is a very exciting time for the United States of America, and especially for the fact that we will continue to always have a great relationship with the country of Japan," end quote. Prior to this, Trump had escalated trade tensions with Japan, threatening to impose steep tariffs if no agreement was reached before a set deadline of August 1st. This threat represented a significant increase from Japan's current 10% tariff rate on most exports, implemented during Trump's April 2nd Liberation Day, when he imposed duties on trading partners worldwide. Furthermore, Trump had revealed his intention to set new tariff rates unilaterally for various trading partners through letters, bypassing the need for individual trade agreements. This decision left the rest of the world in a state of uncertainty. In other news, Elon Musk's artificial intelligence startup xAI is reportedly seeking to raise up to $12 billion in debt to fund a massive AI supercomputing infrastructure powered by Nvidia's chips. xAI is working with Valor Equity Partners to line up financing from lenders, with the capital earmarked for purchasing high-end Nvidia GPUs, reported the Wall Street Journal, citing people familiar with the situation. The chips would be leased back to xAI to support its AI chatbot, Grok, and broader large language model training efforts. On Tuesday, Musk posted on X, formerly Twitter, that xAI is currently training Grok on 230,000 GPUs, including 30,000 Nvidia GB200 AI chips. He also revealed that a new supercluster with 550,000 GB200 and GB300 chips will soon be operational. In another post, he outlined xAI's plan to deploy 50 million units of H100 equivalent AI compute within 5 years. Earlier this month, it was announced that Musk's xAI had raised $10 billion, $5 billion in debt, and $5 billion in strategic equity to expand its AI infrastructure. The latest funding talks come just weeks after the Financial Times reported xAI was exploring a new equity round that could value the company between $170 billion and $200 billion. At the time, Musk said xAI was not seeking capital, saying, quote, "We have plenty of capital," end quote. However, sources told the Wall Street Journal the new financing may include lender-imposed conditions, such as repayment within 3 years and borrowing caps to limit risk. xAI's ambitious plan signaled intensifying competition in the global AI arms race, where rivals like OpenAI, Alphabet's Google, and China's DeepSeek are also scaling up infrastructure. Northrop Grumman, a key player in the aerospace and defense sector, is strategically positioned to capitalize on burgeoning international demand, particularly in the Middle East and Europe, fueled by escalating regional instability. This was a key takeaway from the company's robust second quarter 2025 earnings call, which saw the defense giant surpass revenue and earnings forecasts. The company reported a significant 18% year-over-year growth in international sales, reflecting a global environment of increased defense spending. CEO Kathy Warden highlighted the breadth and the depth of the company's portfolio and its ability to, quote, "respond with speed to our customers' needs," end quote. She emphasized, saying, quote, "The U.S. and our allies are making significant investments in defense capabilities, and we continue to see growing demand and opportunity for our broad range of product offerings," end quote. Warden specifically pointed to the Middle East as a region ripe with potential, saying, quote, "In the Middle East, where I joined the President Donald Trump in May, there are several multi-billion-dollar opportunities in integrated air and missile defense, munitions, E-2D, and ground-based radars," end quote. Europe, too, is experiencing a, quote, "generational shift in defense spending," end quote, with NATO countries committed to increasing their defense expenditures. This provides a basis for, quote, "strong awards and sales growth," end quote, for Northrop Grumman across weapon systems and integrated air and missile defense solutions. The company's strategic investments in production capacity, such as doubling solid rocket motor output by 2029, underpin its ability to meet this rising global demand. Warden reiterated, saying, quote, "Speed of bringing technology to market is important in this environment, and capacity is an important enabler to rapidly fielding capability," end quote. In other news, Kevin O'Leary has seemingly thrown his support behind President Donald Trump's proposal to eliminate capital gains tax on primary home sales, calling it a quote-unquote common sense move to help American families build wealth. On Tuesday, O'Leary, also known as Mr. Wonderful, posted a video on X, formerly Twitter, praising Trump's tax plan while appearing on Fox News. He argued that removing capital gains tax on home sales would allow young families to trade up without being penalized. O'Leary said, quote, "No capital gains tax on your primary home means young families can grow without getting punished," end quote. He also said, quote, "Don't tax them to death when they trade up, it's common sense," end quote. In the video shared, he said, quote, "If you want people to take on ownership and mortgages, they have to be able to trade up. They can't get whacked for a third of their value," end quote. His comments came just hours after Trump said his administration is considering a federal exemption on capital gains from home sales. Trump told reporters at the White House, saying, quote, "If the Fed would lower the rates, we wouldn't even have to do that." He also added, saying, quote, "But we are thinking about no tax on capital gains on houses," end quote. The proposal comes amid a housing affordability crisis with mortgage rates and home prices at multi-year highs. Earlier this month, Moody's chief economist Mark Zandi warned that the U.S. housing market is flashing a red flare, with home sales at a low and builders pulling back due to high mortgage rates and rising costs. He predicted further weakness, including potential drops in home prices, new construction, and completions. Tesla's sales woes continue as the electric vehicle giant recorded a 21% year-over-year decline in sales in the state of California. The data released by the California New Car Dealers Association on Tuesday showcased that the automaker recorded over 41,138 new registrations in the second quarter, a 21.1% decline from the previous year's figures of 52,119 registrations. Tesla's year-to-date sales through June fell 18.3% compared to the same period in 2024, with registrations dropping to 83,375 from 101,991. The decline also pushed Tesla's market share down to 45.3% from 53.4% a year earlier. An 8.1% slide, Tesla's second quarter market share stands at 8.5%, down 2.9% from last year's 11.4% in California. However, the Model Y and the Model 3 continued to be top-selling EVs in the state, with 44,112 units and 31,394 units sold in the state respectively. The news comes in as Tesla is readying itself for the company's second quarter earnings call scheduled to take place on Wednesday after market close. Analysts expect the company to report a second quarter revenue of $22.79 billion. Bank of America also raised Tesla's price target to $341 ahead of the earnings call, citing confidence from the robotaxi launch in Austin, which could help the company deliver on the unsupervised FSD promise by the end of the year. Piper Sandler analyst Alex Potter also reiterated the $500 price target for the company, saying that President Donald Trump's ZEV regulations wouldn't affect the company as adversely as feared. In other news, Lululemon Athletica's U.S. growth outlook softened as shoppers embraced new fabric innovations over seasonal basics, pushing catalyst launches into the second half of 2025. JP Morgan analyst Matthew R. Boss downgraded Lululemon from overweight to neutral, lowering the price forecast from $303 to $224. Boss writes that the US product catalyst has been delayed to the second half of 2025 after customers responded well to new fabric innovations. These included Align No Line, Be Calm, Daydrift, and Glow Up, but showed weaker interest in the updated core seasonal colors, which make up roughly 40% of inventory. Consequently, second quarter US revenue growth is now forecasted at plus 1.2% year over year, down 50 basis points from first quarter's plus 1.7%, equating to a plus 1.0% two-year stack. About 80% of the product assortment faces conversion challenges despite second half of 2024 inventory investments designed to accelerate growth into the first quarter of 2025. Management plans further the second half of 2025 investments, expanding Align No Line to all stores by September and using air freight to speed inventory deliveries, citing confidence in first quarter metrics and the U.S. women's business. Boss writes that alongside product assortment conversion headwinds, management noted in its 10Q that America's same-store sales growth was constrained by softened store traffic. Euromonitor forecasted only 1% growth in U.S. sports apparel for 2025-2026 versus 11% in fiscal year 2021 through fiscal year 2024. From an analyst perspective, Lululemon's international market penetration remains a significant growth opportunity, particularly as the company aims to scale brand awareness globally. However, recent analysis suggests a more normalized pace of growth in China mainland, a market previously seen as a robust driver. Domestically, in the US market, product assortment challenges have led to increased markdowns and a more subdued revenue growth trajectory for the athleisure giant. These internal issues, combined with higher fixed cost leverage hurdles across both operating expenses and selling, general, and administrative expenses, are expected to further constrain Lululemon's multi-year margins. And that's been your daily news impacting the markets. Be sure to subscribe and follow Benzinga daily to stay up to date.